Let's bring on board then Vinod Karki, who joins in. He's the head of strategy at ICICI Securities to chat about the road ahead for the markets. Vinod, let's begin by talking about whether or not it would be prudent to dip in and bargain hunt at a time when the market saw that adverse correction.
Hi, good morning, and thanks for having me on the show. As far as the market is concerned, currently the key risk is what will be the effect of this coronavirus on global demand and global supply chains. Right now, what we can understand it is the risk is largely on the supply chain side, while it could be much lesser on the, or we don't know, but it seems as if the demand side is not a big issue. The supply side, especially coming from China, seems to be the issue. So a lot of things are not unknown right now, but what is absolutely clear is that the capital markets or the stock markets have already kind of factored in the significant slowdown. If you see the global equity markets are anywhere, and on average would have been down 10% since this thing started getting traction. So, and what is happening is a lot of stimulus has already started coming in terms of rate cuts. And yesterday I saw Italy doing a fiscal stimulus. So overall, what is coming out is that we are not very clear about what the eventual impact on demand will be. We know that for certain that short term there will be a supply issue, but the market has more or less kind of decided there will be a significant impact. So the risk reward that way looks good, but assuming the worst case, what the market has already kind of factored in comes in, then the market can stagnate at these levels for some more time. So that risk should be beared in mind when you try to, pick stocks at this juncture.
With that view, Vinod, borne in mind, where is it that you would actually buy? Because a lot of experts that we've been talking with since morning have been really recommending buying just the same, the same ICICI Bank, the same IndusInd Bank, though some believe that there is now value emerging in the beaten down auto space. Select categories like a Bajaj Auto or Maruti, for instance, have managed to withstand, the sales slowdown, and their monthly sales data shows some signs of improvement. Do you also believe that autos is one pocket where in this decline one could bargain hunt?
Yeah, so auto, I think there's a bit of cyclical and structural story playing out over there. So we'll have to be very selective over there what we pick up. Amongst our top pick, we have TVS Motors, which is a play on scooterization and the rural recovery, which we expect can come in, given what we know about the incoming data. But overall, there are a lot of issues which need to be seen stock by stock level. You can't take an overall view on auto right now, especially given what we have from the coronavirus disrupting the supply chain. We recently analyzed PSU stocks, and we think that value could be emerging over there if you compare it over a long period of time. Although it's a known fact that they are cheap, but what we feel is what can drive, what are the catalysts in the near term, you can say, is first of all, if you see, because of this coronavirus, the real interest rate scenario is really now, going down. So interest rates are falling, and we saw that in the bond yields here also, while inflation has been, on the higher side. So real interest rates are low, and in this environment, what we have seen in the past is that if you have assets where growth concerns are not there, and they are investment grade assets, and they are yielding very high. So if you see the dividend yield or the trailing earnings yield of the PSU stocks, I am just talking about the better quality and where growth outlook is not impacted. Given this environment of low real interest rate, it is quite probable that these investment grade assets which are yielding high and the growth concerns are not there, the balance sheets are good, the cash flow environment is improving, the ROEs have kind of bottomed out. I think there is value over there to be seen. And as far as the other type of, so basically either you have good quality stocks where the value is emerging or high growth stocks which continue to be expensive. I think these are the two areas where one can kind of look at, plus the recovery stocks. So you have sectors which are coming out of deep stress like the telecom sector or some of these corporate lenders, as you just pointed out a few names. So these are the pockets where I think growth, recovery, and deep value with high quality trades. I think these 2-3 pockets can do well if you were to pick up stocks.
We were just hearing one view that perhaps some of the very beaten down and names, particularly in the high dividend yield space, whether it be, even PSU names, whether it be even in the very beaten down metals pack, could actually offer a good buying opportunity at this level. Now, these have traditionally been names that people tend to stay away from. But Vinod, would you think about, getting into some of these names on that basis?
Yeah, so if you talk about commodities, they are a different ball game overall. So the key driver for commodities is commodity prices, and currently, given the outlook of coronavirus, the outlook on commodity prices would be soft right now. But one has to see beyond that. So I would suggest that where the growth outlook, let's say utilities, for example, the latest numbers that are coming are showing that power demand has picked up a bit, coal production has picked up a bit, So where there are no big unknowns in terms of growth issues and the yields are good, I think that is where it's much safer. Or let's say some of these commodity companies, like we have this Mishra Dhatu in our this thing, where they are catering to new areas which are growth areas, like space exploration and all. So there, where the growth concerns are not there, the yields are better. The stocks have corrected. I think makes sense to go into those areas rather than trying to speculate in areas where you have, the uncertainty on growth is quite high.
All right, fair enough. So still uncertain with regards to growth. So talking about growth then, names like a Titan, Jubilant Food, and I noticed these are in your basket as well. Those have consistently performed. What's your outlook on some of these sort of consumer-driven names going forward?
Yeah, so what is coming out? So if you see this result season, what was clearly coming out was that while there was weakness in overall consumption, there were pockets of optimism. What we feel overall is that once because if you see the last 2 quarters, I think the GDP has more or less bottomed out. So, and even in this environment, we haven't seen a significant slowdown in some of these discretionary spending kind of, and where the market shares are being gained by these large players in the discretionary consumption space. They're really faltering on growth, even in a very weak environment. So while we come out of this lean patch of growth, I think this story will continue. So some of these stocks which even in a lean period have shown decent growth, like some of these QSR companies, some of these, the ones you named, in the consumer discretionary. So we haven't seen a significant dip in discretionary consumption spending from some of these names, obviously because overall consumption may be weak, but these guys are driving growth by execution, by differentiating and by capturing market share. That seems to be the story. And that seems to be the story in the financials also. While the overall credit growth is very weak, we see some of these companies gaining market share, growing very fast. So that is how I think one should pick stocks where value migration is happening in an environment where the overall GDP is a weak spot, but value migration is happening. You see companies executing better, getting market share, growing faster. So those are the spaces which will continue to outperform or at least give you market returns, even if the valuations are expensive. But a consumer stock which is very expensive and is faltering on growth is actually a sitting duck in my view in this environment.
Good to have you on the show. Thanks much for taking the time out and helping us digest what the market has seen in the week gone by.
Thank you.
Now,
Thank
though,
you so much.
the bounce is continuing. We're holding up a good 1.5% up in the green. Breadth, of course, has seen a significant improvement. Infrastructure is the one which is really leading the market recovery. You've also got technology, real estate, pharmaceuticals, metals, media, automobile, banks, FMCG. In fact, as I speak, all sectors are in the green. We also caught up with James Sullivan of JP Morgan. And he chatted with Nikunj to try and really dissect the fall and what repercussions would it have on investing across the globe.